Hello and welcome to today's hot sheet. Today I will be discussing housing inventory and PPI. Let's get the comment section rolling right now. Today is Monday, April 14th, 2025. I am Jeremy Knight and the hot sheet starts now. All right, welcome back to the hot sheet. I see we got Chris in the chat, Adam in the chat, Shelly, Thomas, Phoebe, Fidel. What else do we got in the chat? Let me know where you are tuning in from today. We got Denver, Colorado in the house with Justin. Welcome to the hot sheet, the industry's only live daily news show on the internet, brought to you exclusively by BAM. The hot sheet covers what you need to know about the real estate market industry in a 24-hour time period. For access to the charts and slides we'll be reviewing today and every day, sign up for BAMX on Skoll. This is where you get access to all the hot sheet daily downloads, courses, bi-weekly masterminds, and the BAMX community. Use the link in the description. It is my affiliate link, Jeremy Knight. Use that. I hear that great things happen when you use my affiliate link. And on top of that, Byron said that I can't get more signups on BAMX than him. So let's prove Byron wrong, because that would be phenomenal. Byron is off saving puppies in the Congo today. He could not make it. So let's all wish him well in his puppy saving expedition. We got Brad in the chat. Leonard in the chat, Rachel, good to see you. Don, good to see you. Welcome in today. So let's talk about Logan Motashamy's weekly market tracker showing, despite last week's mortgage rate spike, housing data remains resilient with year-over-year gains in purchase applications, pending sales, and inventory and new listings. If you want to pull up that chart, Bobby, this is actually a really, really great chart. Up 9% week over week. This is a conversation I would be having with my sellers right now, my buyers right now. Where are we seeing with this information, especially on mortgage applications this time of year? Because if we compare that to last year, we are up 10% year over year from last year's applications. And we all know what happened last year. It was a funky year, depending on what market you're in. I'm in the Austin market. And last year at this time just wasn't as fun, I think, as compared to other years. So 2025 weekly trend so far is 7 positive at 3 negative and 3 flat. So it is more positive than it was last year at this time. And if we all look back, you tell me in the comment section, was 2024 a good year at this time, or was it a bad year for you at this time? Considering, what was it, 79% of agents didn't sell anything last year, I would imagine it wasn't as great for most people. Last week's rate surge could soften next week's data, though, and so that is pretty important to look at. I know who else was on the edge of their seats last week going, okay, all right, rates are down to 6.5. This is amazing. They're going to keep going down. What the heck is happening? Now they are going up. And then we saw the 10-year just go up and up and up and up. I have it on good authority that China was selling off bonds, which meant that our bonds were going crazy in the stock market. Oh, man, who made and lost money in the stock market last week? I started off losing a lot of money, then making it back. So you tell me how that worked for you. All right. So in this article, it also says that if rates drop towards 6%, expect a strong rebound in existing home sales due to historically low baseline activity. And yeah, I've been saying that for a long time. If we hit even 6.5%, I feel like every time we've hit 6.5%, especially here in the Austin market, things have gotten busier. Let's talk about pending home sales. Bob, if you want to pull that up. This doesn't look dramatically different from last year, but it is positive. So in 2025, and you got that chart up, Bobby? There we go. 2025, we had home pending sales at, 2024, we had them at 371,000 for the same week. We're at 377,000. So up about 5-ish thousand from the previous year. But we compare that to 2023. 2023 was at 335,000. So year-over-year growth, it looks like it is still continuing. I'm curious, are you starting to see more pendings? I know we listed a few properties last week, and I was expecting instant offers. Speaking of instant offers, at the end of this, we'll actually talk about Zoodealio, where they're seeing more cash offers. So stay tuned for the end for that. But I'm just curious, where are you looking at this year? In this article, it went in to go over the 10-year Treasury and mortgage rates. Logan forecasted that in the 2025 range, the 10-year was going to be at 3.8% up to 4.7%. And we're kind of still in that mix. I mean, I feel like that's like such a big gap. Mortgage rates between 5.75 and 7.25, such a big gap. I mean, anybody can throw a dart in that target and make it. So I don't know that Logan's forecast on those was too precise. I know I said we're probably going to be in the mid sixes by the end of the year, maybe down to 6.25 by the end of the year. I'm curious where you're thinking. Phoebe says 2024 didn't slow down for me until Mayish. And Laura says, good morning from Seattle. Okay. Hey, where's the comment section at, by the way? Brad, I haven't heard from you in like 4 minutes. Come on, Brad. What's going on, buddy? Okay. Mortgage spreads. Let's talk about mortgage spreads. I think we have a chart for that. Maybe not. So they improved in early 2024, recently worsened. If spreads had remained at 2023 levels, though, mortgages would be close to 8%. If spreads had normalized, would be closer to 6%. I would love to see rates closer to 6%. I would love to see them below 6%. I'm curious what your thoughts are on that. Okay. So April 4th to 11th, which was last week, great week. I went karting over the weekend with my son. Phenomenal time karting this weekend. What did you do this weekend? Curious. Did you work your tush off? You should be, because this is the time of year to do it. So from April 4th to the 11th, 2025, increased from 691,000. So this is housing inventory. We got a chart for that, Bobby, right? Housing inventory increased from 691 to 702. What's interesting about this stat, though, if you go back to 2019, before the pandemic, we were at so 2015, we were at 1,021,000 units on the market, right? Rolling at 702. So we're real far off that 2015 pace. And if we look at 2024, in 2024 increased from 512,000 to 526,000. So we're 200,000 units almost, about 173,000 units higher than we were last year. I'm seeing more inventory in the Austin market. This is something I've been talking about on my YouTube channel, that even last year I said, hey, expect more inventory at the beginning of the year. But if we saw rates drop down, a lot of the inventory would get taken up, because I'm seeing a lot of buyer demand. Are you? That's the question. And how are you talking to your clients about this? But all-time peak was in 2022. So peak low was 240,000 units. We're 500,000 units higher than that almost. So pretty high compared to 2022. So the peak 2024 peak date was 739,000. So how soon do we get to that mark? And again, 2015, 1 million. So inventory continues to grow and indicate healthier market conditions. Brad says, I am with Phoebe. It was mid-May to June last year as well. And I saw the same thing. I feel like, especially, I don't know how school works in most areas, but you get that graduation time frame in like mid to late May, and then everybody's on vacation, especially in the Texas areas like Austin, Dallas. It gets hot as heck during that time of the year, and everybody heads to 30A. Is that what the place is in Florida? 30A. All right. New listings in 2025 are at 76,000. 2024 at the same time, we were at 66,000. In 2023, we're at 48,000. So trending towards seasonal norms. Price reductions. Let's go to price reductions. Do we have a chart for that, Bobby? So price reductions, this is what's interesting. And this is maybe where you start having the conversation with your seller clients on what is happening in the market. But 2025, same time frame. Let's actually go back to 2023 to start. We were at 30% price reductions in the market. 2024, we were at 32%. Well, we're at 35%. And that is because there's more inventory on the market, thankfully. And I'm telling our buyer clients, like, hey, if I can get it, negotiate on all of these things, there's more inventory. Why are you waiting? And is that the conversation you're having with your people? Now, again, our job as agents is to analyze, is it the time for you to buy or not? What is the best thing for you and your family, and give that information? Is that what you're giving your clients? But percentage has stabilized in recent weeks, but could rise again if rates stay elevated. 2025 home prices forecasted will end the year about 1.77% normalized up, and a move toward a 6% mortgage could help expedite that. We're going to go into PPI here in a second, but I want to give you like my thoughts on the good, bad, and the ugly from this article. So I thought I'd give you some of my own insights. So sometimes all these numbers are just rattling off and you really don't know what they mean, but here's where we're at. The good is inventory and listings are trending towards normalcy and buyer demand still holds, suggesting resilience. The bad, though, is rate volatility is persistent, and persistent affordability issues threaten to stall our progress, with price cuts signaling market softness. And the one thing that we just can't predict right now is tariffs. I think this is one of the things that, it doesn't matter what side of the aisle you are politically, tariffs are impacting the market. Last week, we saw the stock market absolutely die and then come back with the news that they were going to be a 90-day pause. So, I mean, you tell me in the comment section what you think about all the tariff information going on. Okay, let's go to the PPI. There's some really good information about this PPI, and I went to my good friend Grok and I asked Grok its idea and thoughts on this. So I'm going to give you what Grok said about this, but let's go over the highline numbers here. So producer price index PPI fell 0.04% in March, driven by sharp drops in energy and food costs. Did you notice the gas prices go down? I just drove an hour south to go karting this weekend, had to get gas, and I was like, whoa, these prices are definitely cheaper, especially when you're buying premium. All right, marking the largest monthly decline since 2023, even as core inflation remained stable and year-over-year PPI rose to 2.7%. So headline PPI down 0.4% month over month, seasonally adjusted, that is 0.01% over February and 0.06% over January, but it is up overall 2.7% yearly unadjusted. So core PPI, final demand, less food, energy, and trade up 0.1%. Here's what Grok said about this. All these numbers, what does all of this mean? Here's what Grok said. I'm curious what you think about this. So a monthly drop suggests inflation pressures are cooling, which could benefit consumers by slowing price increases in alignment with hopes for controlled inflation. In fact, actually, real quick, what AI are you using in your business? I find that I'm using AI over and over and more and more. You got Skull, where you can, access all your hot sheets. I feel like that is my AI for the housing market. So you might want to use that as well. By the way, in the description is my link for today if you want to sign up for BAMX, which I highly recommend because I use BAMX all the time. All right. So, basically, this is going to help stimulate the economy a little bit. Some posts on X reflect optimism about lower than expected PPI, signaling milder inflation. But there could be the flip side of this is some slowdown in the economy. The decline driven largely by 4% drop in energy prices and 2.1% fall in food prices could signal weakening demand, hinting at potential economic slowdown. Some X posts express worry that this reflects softness in the economy rather than just inflation relief. So I'm curious what your thoughts are on Grok's take on this. Let's see. Hello from Houston, Michael. Good to see you. There's no chart to convey how humans are feeling about the economy future. It makes them twitchy in my experience in the last month. Laura, I agree with you wholeheartedly. Nobody wants, when presidents take over and switch, the market loves stability, right? The stock market loves stability. And so when you have all of these new things injected into the market, it does cause people to panic. And I agree. All right. So let's see. Energy was down 4%. Food was down 4%. Core goods were up 0.03%. Gasoline prices fell 11% last week. I noticed it at the pump. Did you? Steel mill products are up 7%. I wonder if that's to do with tariffs. Services are down 0.02%. Trade service margins are at negative 0.07%, and transportation warehousing down 0.06%. Brad says, we have been using both Grok and I can't read that. And what does that say? There we go. And ChatGPT, Rebel, Canva. Depends on what we are trying to do and get some sounds like. I mean, I'm using it every day. I'm just curious. Okay. Let's see. Let's go. I mean, who wants to hear more about this? I mean, I feel like we get it a little bit. What's notable though is egg prices are down 36%, and that is partly to do with crude petroleum. Raw milk was down. Services and immediate demand was down. I'm curious if you are wondering where Zudilio is ranking the top 10 markets for cash offers, ending April 11th. We'll start with number 10. My good friend, good Charlotte, North Carolina. Charlotte, North Carolina, 10. Denver, Colorado, 9. Tampa, Florida, 8. Richmond, Virginia, 7. Phoenix, Arizona. I was just in Phoenix giving a talk on YouTube there just last week or the week before. So good to see you on the list. San Jose, California, 5. Dallas, 4. Atlanta, Georgia, 3. Shout out to my good friend Greg Goat over in Atlanta, Georgia. Houston, Katie Day, good to see you in the chat. She's not in the chat. Number 2, and then Las Vegas, Nevada, number 1. If you want to pull up the 10-year treasury, let's see where we are at. Let's see. Curious to 10-year Trevor. And then we'll look at the 30-year fix and see where we're at. Geez, I was hoping that we would just see it negative, 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 negative. That way we could see some more buyers out in there. We are down a little bit, man, 4.4. I feel like we were just at 4 not too long ago. So hopefully we'll see rates dip a little bit. Let's see where we're at on the 30-year fixed. And I love Mortgage Daily News. I'm looking at that thing every single day. Where are we at? Can't even read it. Scroll down a little bit. There we go. It says we are at 7.07% on the 30-year fixed. Ugh.
So the read hasn't dropped for today, but that's as of Friday.
That was as of Friday. Yeah.
Yeah, as of the 11th.
We might see a little bit of a drop today. Probably not a lot, I would imagine. Probably still over 7. How are they getting accepted? Maybe just my market, but folks want to usually go on the market and skip the cash. Interesting question. I feel like, it depends on the market, but if I got a good priced offered cash in the Austin market, I have a feeling a seller would take it in the Austin market, but we weren't on that list either. So, all right. Thank you everybody for joining the hot sheet. Make sure you follow back. I think I'm coming back up on Wednesday or Thursday this week.
Thursday.
Yeah, Thursday. Everybody do me a favor and wish Byron well, saving an orphanage of puppies in, I think it was the Congo. Maybe it was in
Botswana.
Charlotte. I don't know. What was that?
Botswana.
If you don't know, he is a huge lover of puppies. So I always love when he takes the time to give back to our puppy community. All right, everybody, we will see you on Thursday, but we will see you back tomorrow. And by the way, down below is my hot sheet code. And so you got to use it. I mean, you just got to. All right, we'll see you tomorrow.